Well, for more on how markets are reacting to the latest developments in U.S. trade policy, let's bring in New Vision Wealth Management CEO and co-founder Ryan Lamont. You know, these markets are like Teflon. No matter what happens, they find a way to come back up again. 10 days ago, we were worried about U.S.-China, potential 100% extra tariffs. A few days ago, we were worried about U.S. credit concerns and cockroaches. And now we're talking about, you know, the S&P posting its biggest two-day gain since June. 85% of companies that have reported have actually beaten. Where is the downside risk going to come from?
Well, lots of downside risks, but the magical word is retail. Retail investors are just pouring money into the U.S. stock market like crazy, and this is what's sustaining it. I posted a few days ago just a meme that shows a very carefully crafted portfolio with risk management, with everything, and a small block here on the right called a Trump tweet. So all of this can crumble just on a tweet and then goes up again.
I mean, that's a cute meme, but at the same time, even that tends to be short-lived. The reaction after President Trump's Truth Social post a week ago, you know, on the day, it was quite intense. But you know, by Monday, Tuesday, markets had recovered again. So it feels as though the market is permanently in taco mode, right?
It's about conviction.
Yeah.
Just like central banks buying gold, institutions buying gold, they believe in the macro backdrop that is needed: deficit, geopolitics, inflation, etc. Even though gold is close to 4,400, people are still buying. Same thing with retail investors in the U.S. Since the pandemic, it has become crafted in them buying the dip all the time.
Yeah. Okay, so you've been on this show many times and have talked about gold. I know that it's a good position of your portfolio.
Yep.
It keeps going higher. And actually now, people are saying, you know, if you look at all the technical charts, it has surpassed what, you know, technical indicators would indicate as a normal rally at this environment. Do you believe it's time for a pullback in where we're trading?
I don't know. Let me say, I believe a pullback is due and it's opportunity to buy because the macro backdrop is still there. We don't look at technical analysis when fundamentals are perfectly aligned for gold to go up, and buying is just relentless. And if you look in China, for example, India, even the US is buying gold at the moment. All of this is sustaining gold.
What if the USD recovers next year? Then what happens to gold?
So we need a China-US deal to happen. We need Ukraine-Russia to be resolved.
Yeah.
We need inflation to be in check. We need deficits to start reversing, or at least have a plan to reverse deficit. The US debt is rising $25 billion per day. Interest payment is $2.7 billion per day. All of these are risks. Europe is no better. So we need all of these parameters to reverse for gold to go down again.
I was speaking to somebody yesterday from LW Capital, and he was saying he almost sees a super cycle in metals and rare earths. You know, we're talking about gold and silver; those are precious metals. But also, you know, you look at copper, you look at aluminium. There's been a huge run up in those prices as well, in addition to the increased scrutiny on rare earths and the weaponization of rare earths. Are you of that view as well?
Absolutely. Palladium, platinum, all of this. We are in the era of AI. We're in the era of data centers. We're in the era of chips. All of these elements are very much needed for this industry. And we're not refining and mining enough of these.
Yeah, but at the same time, you look at oil, and the price of oil keeps drifting lower and lower. So not all commodities are rising, and oil, very important one globally. One of the reasons I've seen for 10-year treasuries trading below 4% is there's a view in the market that perhaps there are actually going to be disinflationary pressures coming through because of the drop in the price of oil that's going to affect inflation expectations. Where do you stand on that debate on what all of these commodities price movements mean for ultimate inflation?
I disagree with that because oil has proven across time that its inflationary or disinflationary powers are very, very limited. We are almost weaning from oil. We can survive without oil, and it's not driving very much into the supply chain. However, everything else, yes, look at the price of coffee, for example. It's absolutely flying. There are commodities that Americans are buying every day or consumers are buying every day that are much more expensive. But oil, no, I don't believe it will have this inflation.
Okay, so are you in the inflationary camp then in the U.S. right now?
100%.
Based on what? Because we haven't seen it yet. You've seen green shoots maybe of inflation being sticky, but you haven't seen that major inflationary boost that's come through from tariffs that people had expected.
Tariff will take 18 to 24 months to feed into actual inflation. As long as debt is still ballooning, deficit's still there, all across the world, this is inflationary.
Yeah. Okay. So last time we spoke, you gave me your sort of surprise stock pick, which was Build-A-Bear, and I hadn't realized that Build-A-Bear had outperformed NVIDIA, which came as a huge one to me. Do you have any others up your sleeve?
I'll give you one every month when I come here. So as fund managers, we're supposed to not invest into the overcrowded, overvalued trades. This is why we're paid, to pick stuff that is not overcrowded and overvalued.
I don't know, but if you had been in NVIDIA, you also would have made a lot of money for your investors.
Oh, yes. Yeah. Zepp Health. Look at Zepp Health. ZEPP.
Okay. What does it do?
Our job is, it's basically watches for health. It's fitness trackers, etc. That has done very, very well. Our job is to pick up these stocks that are not overcrowded, that are undervalued, and that rise in price. Zepp Health as an example, and I'll give you one each month, I promise.
I've got to say, though, me personally, I gave up wearing my wearables a long time ago because I don't need my watch to tell me that I'm not getting enough sleep, Ryan. Thank you so much.